Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Thursday, January the 14th. Well, the downtrend that the market's in the first time frame continues. Today in bar chart terms we have an inside day, and that's an indecisive day for the downtrend. It doesn't change the trend though. The previous lower high and lower low downtrend is in force. But the inside day does offer indecision. The inside day tells us that the sellers weren't strong enough to take out the low of the previous candle, but by the same token the buyers weren't strong enough to take out the previous high. But if we're in a downtrend, we like to see the bears in the ascendancy, and that hasn't happened because they failed to take out the previous low, so that's what raises some doubt. Having said that though, if we look at the very small body on this candle, we have a large shadow on the top of the candle, and it's much larger than that on the bottom, and that represents downside price rejection, and the downside price rejection was much stronger than the upside, so that actually offers some consolation for the bears. Possibly the bears were a little bit stronger than the bulls on this trading day. The market is also closed just down below the midpoint level, which reflects the bears having control of this market. But it is very weak control, and they did lose a little bit of commitment during the day. The bad story for the bears, though, is that they've made very little net progress on the day between the open and the close, and that's basically the size of the body of the candle. The size of the body of this candle tells us that between the open and the close, the sellers really haven't had much strength, that they've been able to make very little net progress on the day between the open and the close. They tried to make some progress when they were trading down here, but they lost that. The bulls also tried to make some progress, but weren't strong enough too. So a fairly indecisive candle at the moment. Now we have closed outside of the flag pattern that we identified once again, and we've had now one, almost two, three. This is the fourth close down below the flag, but we're not getting any seriously bearish closes down below the flag. And what I like to see when we have the breakouts above or below any of these patterns is firstly a close below. We don't just want a penetration below, we'd like to see a close. But if we're trading down below a pattern, then I like to see a substantially bearish close. The opposite for if we break out to the upside. It's good to see a substantially bullish close. So we need to be a little bit dubious about whether this pattern is quite complete at the moment. And looking at the trading around this 7680 region, there has been some very strong support offered around here. The previous candle is a good example of that. When the market traded all the way down to 7660, there was buying coming in, and again we can see the small shadow here represented buying coming in. Having said that, though, the market did manage to close below the 7680 region, and that could be significant for this market. I think what we need to do is look to this low here around the 7660 region and look for confirmation of a close down below that. And there is potential for the market to trade down to the top of the cloud here initially at 7580 and find support anywhere through the cloud and certainly at the bottom of the cloud. There isn't a lot of support all the way down below there. Now the market is trading up above the cloud or the Kumo, so overall there is a positive bias to this market, but the market has begun trading down below the Kijun-sen and the Tenkan-sen, which means that in the medium term and short-term time frames the market is fairly negative. So we're getting some mixed signals from this market as well. Also, we have had the breakout below the flag, so there is potential for this market to come off and test the top of the cloud here. So I think we need to watch the 7660 region over the next few days.